The MoneroTopia guest segment is sponsored by Cake Wallet. Store, send, receive, and exchange your Monero and Bitcoin safely on iOS and Android too. Cake Wallet is open source, and you always control your own keys.
Let's see.
Alrighty.
We've got Untraceable. We've got Zoidberg.
What's going on,
who
guys?
else needs to come up here? Who else?
Hey guys.
Get a
Pavel.
hey,
Pavel.
how's it going, man? Yeah, get Pavel up, Ravaga.
Hey.
And
Hey everyone.
what's going on, guys? It's a spicy show. You got we're starting the New Year's off with some energy.
Hey.
Untraceable, what's up, brother?
Hey, what's up?
How's it going, man?
Oh.
Thanks for doing this.
Yeah, holy crap! What the show is like already on fire.
I know.
I'm logging in here to sell all my WoW right now.
I did want to sell my WoW live on air. I want to trade it for Zano. If anybody's willing to trade it for Zano, I will take that trade right now.
Hey, maybe John Murphy will do it.
Yeah, I doubt he'll. Maybe I don't know. Maybe he's a smart man. He is a smart man. I'll say that about him. John, you're a smart man. I'll give you that. Yeah, let's get into it. Andres said, I think most of the heat Zano gets is because of their communication implies it's a better Monero, only less adopted. It is focused and private meme coins. It would be smooth. All right,
I agree with that.
Let's get into all this. I'll let Untraceable kind of lead the charge here. Take it away. Untraceable wanted to have some time with the Zano team, ask him his questions. Untraceable, I don't know. Have you been paying attention to the interviews we've had in the past and the presentations at MoneroTopia and whatnot, or are you coming into this pretty fresh?
I've watched a few. And not all the way through, but I don't know. Maybe some of the criticisms that I have already been addressed. I don't think they have, but I guess we'll find out. Yeah, we'll see. So first off, I just wanted to say that I don't even agree with the title of the stream. I don't like the word scam. I wouldn't say Zano is a scam. Maybe it is, but I don't have the proof to say it's a scam, so that's just conjecture.
Mm-hmm.
And the word scam is just is completely lost its meaning. There's tons of people who call Monero a scam, and I don't want to be doing the same thing. So I'm not coming on here to throw FUD or to tell people that they should or shouldn't buy Zano. I do have some criticisms and some concerns, and the reason why this even got started, for some context, is, well, first off, a lot of people constantly ask me like, hey, what do you think about this coin? What do you think about that? And so whenever the topic of Zano comes up on Twitter, I sometimes don't have the most positive things to say because I do have some concerns. So I think Mr. Quibbs, it was Mr. Quibbs from Zano team who noticed this, and he messaged me. He said, hey, I'd be glad to jump on a call and we can talk about the concerns you have about Zano and clarify things. And I said, okay, but let's do it publicly let's do a public call instead of a private call. So that's why we're here today.
Yeah, which is fantastic. And for me, that's bonus points right there, right? Like, so imagine if you had the same experience with Darrow project or something, right? There would be no like cordial response of, yes, let's talk about this, let's talk about the issues. So that me right there is one of the reasons why I've given Zano the time of day, because they're all right. They already passed the first test of they're willing to come out, engage, and talk about things openly. But go ahead, do your thing.
Yeah, and at the same time, there is it's good that we are going to address these types of things, because there are actual scams out there, or there are just projects that aren't worthwhile, and everyone has different standards. So this Haven coin, does the private stable coin, that's completely dead, right? So if people had been critical and asked questions, they could have saved themselves. Darrow, completely de-anonymized, and basically that project hasn't received an update in I don't know how many months. So it's good to do this sort of thing, I think. And
and I think we do that. We do that all the time on this show. We do it. That's a big part of MoneroTopia. I always make that part of the anybody. The Zano team will tell you from the moment we started engaging, and I was like, you guys can participate in MoneroTopia, but beware. You're not gonna be treated any differently because you're giving us a sponsorship. You're gonna be out there. You're gonna present your tech, and there's going to be some very critical people in the audience that are going to be asking you tough questions. So that's always been part of it, and that's why even John Murphy, his talk at the conference was, "What is a scam?" And he and there was no ifs, ands, or buts about it. I was completely open to that. Just, John, go ahead, give your talk. You can talk about why you think Zano's a scam. And so that is extremely important that we continue to be very vigilant and we talk about these things openly and we don't let the scams slip through. Haven was one of our early sponsors for MoneroTopia too, and that since went to zero. We never just sold our
Haven is on Cake Wallet.
Yeah,
too. And they were going to be added to Thorchain as well.
But there was always an air of, can we trust? Is this Haven always came? Anybody who was paying attention always knew that Haven came with, can this thing actually work? An algorithm of stablecoin has not been proven, but buyer beware.
I really wanted it to work because a private stablecoin really is kind of like a holy grail of crypto.
And that's and I'll let you go from there, but that is really the second or third reason why I paid attention to Zano, because I think they could be the ones that kind of crack the stablecoin, the private stablecoin, with the confidential assets, and that's interesting.
At the moment, I don't agree with that, and we'll get into that. There was something else I was going to say, but
I'll stop interrupting you, man, and you can go ahead and engage with Zano.
All right. Hey guys, nice to meet you guys. Over the internet. It's nice to speak in person. Anyway, hey, how you guys doing?
Good. How should we call you? I don't think you've been introduced. Untraceable is all right.
Yeah.
All right. Yeah, everyone, if everyone wants to just quickly go over who they are and what part they are, what they do with each respective project. I guess all three of you guys here, Zoidberg, Ravagad, I hope I said that right, and Goblet Fire, you three are part of Zano, right?
Right.
Cool.
Yep.
Well, you can start, Andre.
Just like a quick intro.
Yeah.
Yeah.
I'm co-founder of Zano. I don't know. Me and Pavel, we play very technical roles, so we are both engineering part of the team. I do some core development. Pavel is focused on ecosystem. Pavel will tell for himself, but I myself, as a core developer, I work really close with Val and with a bunch of other guys. We are building the core technology.
And Andre, you're always a little bit too humble in your introduction. I mean, tell everybody people may not know that your involvement in Monero. I mean, I think it's fair to say you've contributed more to Monero code base than anybody else perhaps to date.
Yeah, I'm original developer of the CryptoNode code base, which is origin for Monero as well. But I'm not invented the technology itself. I worked together with the cryptographer who invented the protocol, and I was the guy who coded it, understood it as far as I could. And there was other guys. I was just a guy who was mostly involved in coding of the project. So I created the code base, original code base that also Monero uses. Yeah, I've been doing this. Monero started their own way, and I started my own way after I quit the Bytecoin project, and I was building Bullberry back these days, where I made a lot of mistakes, and I have to admit, Bullberry is a failed project, and we just moved it to Zano, and Zano is a project that we built together with Pavel. That's long story short.
Awesome. Thanks, Andre. Ravaga. Go ahead.
Yeah, I do not have an extensive history with CryptoNote. I joined the project on Zana stage, and my background is product management mostly. So I'm doing anything but core development, website, apps, smart contracts if we need to. So this is kind of my area.
Awesome. Well, thanks. Glad to have you. And good to meet you, Gone Batfire.
Hey guys, I'm Gonzalo. I'm Ansano's community manager. Just glad to be here.
Awesome. Good to have you as always. And of course, Untraceable. I think most of us here probably know who you are already. And I think you'll be heading the debate.
Yeah, I'm nobody really. I just have a Twitter account, and a lot of people follow me for some reason. And I've been in crypto space since 2013, and that's about it.
Awesome. Well, go ahead and take it away if you would like to start it, Untraceable.
Okay, yeah, sure. So first, just for some context on I said earlier that so the concerns that I have might not be a concern for everybody, because people have different standards and what they're looking for in a project or in crypto. So my views come from this perspective of like the OG Bitcoiner who was like, I want freedom money, prioritize decentralization, trustlessness, neutrality, fairness, this sort of stuff. So, and this has kind of been diluted. Not many people, many newcomers have this sort of view anymore. Where the normies have come in and they just jump onto a coin and it goes up in price, and they're like, yeah, this is the best thing ever, right? But to me, it's a bit different. So that's where my concerns and the criticisms that I have are stemming from. So I'll start with the biggest thing for me. And first, I just want to ask a couple of questions to confirm, a couple of general questions, and then I'll explain what the concern is. And it's regarding Zano's supply. So 53% of the current supply came from Bullberry swaps. 7.8 million approximately Bullberry was swapped to Zano in 1 month time. That's correct, right? Those correct figures?
Yep.
Hold on,
Yep.
let me check. I don't have it in mind. I just opened it. If you
Around
buy,
it's
right.
around that amount. It could be more precise, but like in the ballpark.
Okay. So, and then there was a 3.6 million pre-mine, which is currently 24.6% of the current supply. You guys are transparent about that. So at Genesis, the amount of Zano emitted would have been 11.3 million. Does that sound correct?
I think we had more because we expected more people to swap, but we burned the unswapped coin.
Okay. Well, I just got that 11.3 million from adding the 7.8 million Bullberry that got swapped.
Yeah,
and
the final
3.6.
supply, that would be the number of the final supply because we burned the unswapped coins.
Okay. So why do the Bullberry swap at all? Why not just launch Zano as its own network? I'm just interested to hear what the reasoning is.
Well, it was extensively explained in a bunch of blog posts I can refer to, but the main idea is Bullberry is the one with the free launch, and not a lot of people would agree, as we imagined, with the idea of having a pre-mine, and technologically those projects supposed to go in very different ways. So we didn't want to force people do a hard fork, and we allowed them to choose. Are they going to stay in the Bullberry on the conditions they agree and mine Bullberry, or are they going to join us with the Zana thing? So we wanted to have a clear separation between those two projects moving forward.
Why couldn't you have just developed Bullberry into what Zano is now? Why did it have to be a completely separate network?
Well, technically, I think Andre Could you explain why Zana and Bullberry is
there's
not the
there's a bunch of reasons. The first of all, it's technically a very different project. Zana codebase, it's basically there is a lot of changes. We rewrote the core. It's a significant amount of code that's been rewritten, and I don't see that there was a smooth way to transition. Second, this is by this time you should remember you're OG. Proof of stake considered to be a very unfriendly direction. A lot of people have a kind of like a really strong disagreement that the proof of stake is something that any cryptocurrency should have, and we couldn't make such decisions to make like such a strong pivot on the Bullberry. So yeah, there was I didn't see it going this way. So we just decided that it's better to launch a new project and give everyone opportunity from Bullberry to join our journey, and that was something that we thought is a good middle ground between all pros and cons. I mean, probably from a business perspective, it would be more smarter to just launch new project and forget about Bullberry, because the user base of Bullberry was pretty small and it was a small project, almost dead. So it wasn't really good decision from a business perspective, but we decided to do it because of many thoughts that we have that it's gonna be a right way to do.
So in short, you said it was because of technical reasons and because of the way the community would have taken implementing proof of stake. Did I get that?
Yeah, one of the reasons it's going to be really challenging to technically implement smooth transition on the Bullberry and the live network. And the second, we wasn't sure that even Bullberry as a project as was launched, we are supposed to change it this way.
Mm-hmm.
I mean, I'm not sure how people would react, but that's what it felt like in 2018 and 2019 when we launched it.
And you said that Bullberry was basically a dead project. There was very few users, etc.
It was dying, yes.
Uh-huh.
That's my perception because of, if you ask why, because of many mistakes that I made in the Bullberry.
Okay. So to me, it's disappointing that these types of decisions were taken, because it's just a few things that stop me from some.
I just got to chime in for a second, because this is Joe Biden, who I guess is obviously
yeah. Look, I'm gonna let the debate happen, and then I'm gonna bring up the question super chats after, so we don't have to.
We bring up all the super chats, but I will. So Joe Biden, Doug, maybe a disclaimer that you get. I literally said that I think like 5 times already today. Zano has sponsored the MoneroTopia conference, and we greatly thank them for that. We don't hide that. I make that. That's part of the reason why I like Zano. because they support the Monero community and us by sponsoring us. So that's not hidden. They don't sponsor our show. They and not that I would even potentially discount that. They sponsor the conference, all the privacy tech projects that participate in the conference, if they have a means to, if they have a budget, if they're if they're not just starting out and they have a means, we ask them to sponsor, and that's what helps fund the conference. So Joe Biden, yes, fully disclosed once again.
So yeah, there's just only a few things that keep me from fully endorsing Zano and getting excited about it. And this the supply, I made my peace with Premine, because everyone just does a Premine. Like I'm excited about DarkFi. They're also doing a Premine. Tari is also doing a Premine. So I made my peace with that, although 3.6 million, 24.6% of the current supply, that is a big one. But okay, the BVR, the Bullberry swaps, though, my issue with that is, how do we know how many Bullberry did you swap? Because as far as we can prove, as far as I'm aware, right, maybe the Zano team swapped all 7.8 million Bullberry, so they tech could control 80% of the supply. But I don't think we can prove that because Bullberry is also crypto now, right? It has privacy. So what would you say to that? How can we be sure of who swapped these Bullberry coins to Zano?
Well, I don't think yeah, you wanna take this one, or
I don't know,
think
Pavel, you
we
can
can
tell it.
prove that. I mean, no one can. We cannot prove that we didn't do that. But if this is the most reasonable conclusion you can come to after checking our Bitcoin talk and social networks, there was a chain, there were people mining it, there were exchanges and trades. And if you assume that it's us who bought the entire chain and then swapped it to launch a new one, well, I'm not going to argue with that. This is your conclusion. I don't have means to prove otherwise.
Right. I'm not concluding that. I'm saying we can't conclude. We can't rule it out. So
well,
it's just one of the decisions. Is one of the decisions that has me cautious about Zano. But we can't be completely sure that didn't happen because, as you said, Bullberry was a dying project. The valuation was relatively low, so and it wasn't traded in many markets that I could find. I don't think it's traded in any markets today. So
no,
I'm not concluding.
Traded, it was traded on a bunch of exchanges, I think. But it's got delisted from few from Poloniex, from other exchanges.
Yeah, but that's kind of the reason. I mean, that's kind of the reason for starting another one with the pre-mine, because project was basically out of funds. And the assumption that someone on the team got enough money to gobble the entire supply is kind of weird, given all the situation. And
right, and maybe it wasn't 7.8 million. Maybe it was only 1 million. Maybe it was only 1,000. Well, we don't know, right? We can't prove it. So that's just a question mark that is basically Zano team pre-mined at least 24.6%, but up to 80%. It's a question mark. We can't conclude whether that happened or it didn't.
I cannot agree with that phrase. Zano team pre-mined 20%, and there is a speculation that Zano team bought other coins for whatever purposes. But I wouldn't call it a pre-mine because this is not something that we did. And as you mentioned, we have like 20% pre-mine, which is big enough. And if we had an opportunity to buy those coins before, why would we make it that big? We could just keep it at 5% and have no questions asked. This doesn't sound reasonable to me, but like, I'm not trying to convince you that it is impossible. It is possible.
I believe the volumes on exchanges for Bullberry during all this time was so low that it wasn't even possible to buy or accumulate that amount of coins. Even we assumed that I was like secretly buying this. There was I believe because the volume looked like really miserable on the Bullberry on the last years. So
okay,
I don't know. We cannot prove that we didn't do something. We cannot only state that we didn't, and we stated we didn't do this. But I think that the whole formula is prove that you didn't do this, prove that you didn't do this. It's something really wrong. You cannot accuse people and ask them to prove that they didn't do something. It's just a kind of speculation or manipulation. I don't know how to call it.
Right. It is speculation, but it is still at the end of the day, it's a question mark. We can't know because it is a possibility. I'm not saying it did.
That it's concern. I understand why it's concerned to people because the supply and the amount of money that accumulated in one hand, it's something really dangerous in terms of financial security or potential profit. That's what people likely most interested in the most of the crypto, even though they declare the technology and stuff. But this is really important, and I understand this concern. And but there is nothing we can do about this except being transparent and honest with everybody. And we did this coin swap in a with a very good will. We wanted to do the best for our users who was loyal to something that I was doing in the 2014, because I had some support back in the 2014, and I really appreciated it. I just didn't want to give up all this stuff, and for that reason we did this, and now we even having backfire on this,
And
people speculating.
Yeah. It's like I said, it's unfortunate that this was a decision instead of just launching with only just the pre-mine, because then I could be more on board. But so moving on from that, another thing I just wanted to get out of the way real quick is I wanted to know, why was it only 1 month given to Bullberry holders to do the swap? Because when I'm researching this and I come across a thread on Reddit, and I see people one guy there was pretty upset about it. Another comment said, I don't know, some months after the coin swap ended, he's asking, "Hey guys, is there any way I can swap? Because I just found my wallet and I have 1,700 Bullberry." So why was it only such a short period of time? For this sort of event where basically anyone who didn't move from Bullberry lost their money, why was it such a short period of time?
The main reason for it, well, first of all, it was announced ahead of time. I think the first time we mentioned it was the December of
8 months.
2018. Yeah, and the short time frame was to have a clear separation and finite supply, because we needed to list a new coin, and they asked us for supply numbers, and we need to have that information conclusive. We cannot say that we don't know what's the supply because we are having the swap from that other project. It was just way too complicated, so we shortened it up because that was the requirement from the exchanges.
Okay. Well, I don't think the swap should have happened at all, but it did, and unfortunately, I think that's way too short of a time. If the purpose was to protect Bullberry holders, but moving on from that, okay, we're done with the Bullberry swap discussion.
And Untraceable, if you want to just at this point too make clear as to why that would even potentially be a concern, what is the concern there, just to clear, for people that are tuning in, and ultimately why would that be a concern if Zano holds more coins than we might expect?
Well, I was getting into that right now, so I guess so. Zano is a proof of stake network, right? So the Bullberry had a dev tax, right? It was 1%.
It's hybrid, just to be clear.
Okay. Yeah. Zano is 50% proof of stake, 50% proof of work.
Yep.
So, but
we lost it.
Oh, did we lose Untraceable?
Yep.
Yeah. Okay. I thought it was me.
Yeah, give him a sec. Give him a sec.
All right.
Am I here?
Now it's good.
Yep.
Okay.
Yeah,
So
can you repeat the question?
does Zano have a dev tax?
It does not.
I would say that it does, because 3.6 million pre-mine, which Zano currently holds 788,000 still, correct?
Correct.
And these coins are staked, correct?
Yeah.
So you are taking block rewards much the same way as a dev tax would. And the network was launched this way, with coins that were created at zero cost to you out of thin air. They are being staked, and now they are generating revenue. So from your staking simulator, I think it's your staking simulator. It's a staking simulator that I found online. Your 788,000 Zano create at the price of $16 per Zano, which was the all-time high yesterday or whenever that was, makes you over $300,000 a year. These are rewards that would have gone to legitimate or regular users of the network if it wasn't for you staking them, coins that were created at zero cost to you, pre-mined. You're generating revenue out of this. Block rewards that are coming from, that should have been going to honest, I wouldn't say honest, but regular users, instead go to you. So to me, that is a dev tax 100%.
I'm confused about the ones. This is exactly why we have it designed that way. The staking rewards supposed to fund the project, and it was never enough. It's just the recent all-time high kind of inching closing to the burn rate we have. So this is just starting to work out, and this is how we intend to fund the project.
Wasn't the pre-mine supposed to fund the project, not the staking? So the pre-mine and the staking both together was your plan from the beginning to fund the project?
Yeah, pre-mine is a finite supply. If we just burn the pre-mine, we got no coins left. So the idea was to reach a certain price level to have it sustainable.
Okay.
And it took longer than expected, like way longer than expected.
Like it's been tough getting there, and just now we kind of inching closer to it. So like, I don't really see it as a concern. This is the way to fund the project, and I don't mean me personally,
but
like people involved in the project.
Yeah, the foundation fund now sits at around 5%. So
okay, but guys, you have $12.6 million in Zano. That is the fund for the project. Staking it, I mean, so I'm not saying that there's necessarily anything dishonest, except for the way that it's portrayed, because it is a dev tax.
But what's dishonest about that? I mean, the fund is auditable, and it was auditable from the first day, and that was presented as the business model of the project on a launch. This is why we don't have I mean, that was the reason for a swap that you questioned, because we wanted to do it this way and we didn't want to force people. So
yeah, the fact that we were going to stake it was clear from the beginning.
Okay. And so the only concern then is that you claim there is no dev tax when there is in fact a dev tax. Block rewards are being given.
Why it's called the tax? Because there is a bunch of a lot of proof of stake projects, and nobody calls it tax. I mean, tax is a very negative word. People hate taxes, and when people associate tax with it's like we are taxing the project. No, we just have coins and we stake like every other. And staking is not that you are getting these coins for no reason because you have it. No, you have to contribute to the network. You have to keep your node running, and for that you're getting your block rewards. It's not a tax. You contribute to network security the same way any other, and that's all been the idea of the project since the beginning.
Yeah, they are providing security.
We actually because we have a really strong consensus model, we keep block rewards very low, and it's as low as it's possible to maintain the reliable consensus model. And from that perspective, we have the minimal percentage, like annual profitability. And I mean, it's not a staking; it's just a minimal motivation for users to keep the network. I don't know why you use taxation word, which is like super negative for most of the people.
Well, I use it because that is what it is. For some
disagree, if you don't mind. Tax meaning we taken pay cut out of blocks produced by other people, which we do not. We stake our coins and we mine blocks and we get the block rewards just like anyone else.
But these were coins that were created at zero cost to you out of thin air. No other user has that ability.
Yes. Still.
Mm-hmm.
So yes, we created the value of these coins, I believe.
So to give you an example of why this is an issue, DarkFi, are you familiar with DarkFi?
Not really.
Not really.
So this is Amir's project. It's not mainnet yet, but they planned to launch as a proof of stake system, and they also have a pre-mine. And recently, last year, they saw the issue that we're discussing now, and that is the I'm looking at the tweet thread that they made here, but essentially they realized that this was an issue, and instead of being a proof of stake system now, they are going to be merge mined with Monero, at least initially. So let me read a little bit about what they wrote here regarding this and why they switched.
If you want to show anything for context, you don't have to, but if you want to, you can.
No, I'm not going to share my screen. Let me just read a quote here. Let me find where it's a kind of a long tweet. Let me just find where it says.
It was a distribution issue, I think.
Oh yeah, you actually, I think you replied to this tweet, so you know about it.
Yeah, I can look for it, but it was basically about how you're gonna distribute the coins at first.
So it says first, nodes must have stake at the genesis of the chain. So there must be some token pre-distribution. Second, in the proof of stake, we had implemented the probability of winning a reward was quasi-proportional to the amount staked. That means that unless the tokens were distributed over a wide network of people for a long period of time, block production would be centralized. And it goes on, and basically it's giving an unfair advantage to the insiders and people who benefit from the pre-mine. And this is a way in which essentially no other user can ever catch up to their stake. You guys will always have a large percentage of the block rewards going to you. And whether you agree that to call it a dev tax or not, it's essentially the same thing. You're taking, yes, you are mining or you're validating the blocks, but these are coins that were created at zero cost to you. No other user has this ability. Where users get 1 Zano per block, you could, because of this 30% pre-mine, or I don't know what it was, 25%, it's reduced. Over time, it averages is that they are getting less rewards because there are a group of people on the network that have coins that were created out of thin air. The equivalent to Monero, if this were to happen in Monero, is it's as if someone had the ability to poof CPUs out of thin air, mining rigs, just materialize them and have 30% of the hash rate getting rewards to them. So
I heard a lot of this. This points was the most common that I hear against proof of stake all of the time. I have I faced a lot of criticism about proof of stake, and none of this criticism actually comes from an actual consensus perspective. It comes from how fair it's to other people. My first comment on this. As engineer, I first concerned about security, and proof of stake is more secure than proof of work. Period. We don't know how to overcome few potential attack against proof of stake. For that reason, we use a hybrid model, proof of work and proof of stake, and we use it not because of it's more suitable model from business perspective for us, but because it's just the only model I know that can resist a potential attack that exists at this time. Because my first project was proof of work. My second project, Bullberry, was proof of work. It was a relatively small project, and I saw how easy to double spend. I saw this different types of attack against proof of work, and I know exactly how weak it, how many problems it have, and for that reason we use proof of stake. Also, this is really sad that DarkFi is going to be using merged mining with proof of work. I believe they're going to be switched to something more resistant to attacks, and otherwise it's going to be really sad. And the last comment that I have about this is, okay, if you don't have this staking thing, okay, you created pre-mine with a dev fund, for example, like 10% of the coins or 20, and then you got burned this coin. When the coin's over, what's next? What's you gonna do next? Because back in 2014, when I launched Bullberry, I remember I had like a lot of like comments in the thread on Bitcoin Talk, because the live was existed on Bitcoin Talk mostly. And there was a guy who came to my project. He said, "Hey, that's a nice project, but you made a terrible mistake. Just you should have made a pre-mine. Otherwise, man, you're in trouble." And I keep remembering this guy because after this, for many years, I saw so many projects that was doing some brilliant ideas, like technically very great developers was building this, but they was like convinced that the proof of that pre-mine is something really bad, or pre-mine is something that should be really small, and they start the project and then the fund is burned and then it's over. And I saw it so many times, so we wanted to create something that will be consistently and let us to keep going and going. And the main question, if you have just a dev font, it will be burned at some point, like it's over. No. And then you have to switch the model. You have to start asking people to donate, but people will not donate because you had a pre-mine, and they will blame you in many things. So there is a lot of reasons why we have this, and I agree with what Pavel said. We don't tax blocks that other people created. We just create blocks that was created by the dev fund. And also, it's not. I mean, it might be fair if we have a like significant, like a huge pre-mine that we are staked like 30% or 40%. But first of all, the part of the block comes with a proof of work, so you have to divide it on two. And second, even if at the beginning we had a way bigger dev font, right now we have like a really small percentage of the whole supply, and we are a really small part of the staking power. We cannot control it. We have a really small cut from it, fair cut, the same as other cuts. So I don't think this point applied to Zana these days in any way.
And people can still mine Zano and get it that way.
Yeah.
Okay, so there are a lot of things there. I took some notes on the points that you hit. So you switched the topic there a little bit, because I'm not debating the merits of proof of stake or whether it's secure. I'm just saying that proof of stake plus a pre-mine is unfair. And as far as that, it's sad that DarkFi is going proof of work. No, absolutely not. That is a great thing, because this issue that you guys have is not going to be a concern. The initial distribution of coins and the unfairness, it's not going to be an issue, because the coins DarkFi will launch. It will be proof of work. There will be a long period in which honest miners get coins, and there's a fair and decentralized distribution of the supply before they consider going proof of stake.
But how they fund the project?
They have a pre-mine.
So it's the same tax. They just tax it in advance.
They are not proof of stake. It's a proof of work.
Doesn't matter. The same way you call Bullberry as a tax, but there was a pre-mine, just was a continuous pre-mine, because we took a fraction of every block. Pre-mine is the same tax. They just took it in advance at the beginning of the block. You can see it as the same as taxation. I don't see how pre-mine is different from the tax as something that you call tax in a Bullberry, for example.
The issue here, guys, is not the pre-mine. The issue is that the pre-mine is staked. Okay, and you launch the chain this way. So Okay,
I see.
I
Yeah,
think
you made your point. I see your point. I
I
disagree,
think
but
whether
I see your point.
okay, I think the viewers also get it. So continue on with. You said you also don't tax other people's blocks. You just create blocks that wouldn't even exist in the first place were it not for you staking coins that were created out of thin air. And you say you have a small part of the staking power, but you have, what is it, 5-6% currently?
Yeah.
Okay. I wouldn't say that's small. And in total, actually, we're only saying we're only counting the coins that you have left from the pre-mine. But you actually, the pre-mine was 3.6 million. So it means I imagine you sold this to investors, private investors. I believe you mentioned in an interview in the past.
We mostly was selling it with little chunks every month to get the salary. And first years, Zana had a very hard years. We had a very little liquidity. So we had to ask our supporters to buy coins OTC. But we was doing it like with little chunks every month, mostly.
So these were sold, this was sold at exchanges, never, were they ever sold to private investors?
We were when was low liquidity, especially first few years of Zana, we were doing this little sales. You can see the history of Dev Fund in auditable wallet. You see how was chunks was cut from it. At some point, we started to use the hot wallet, so we was taking big chunk, and then this auditable hot wallet was used in the smaller chunks. But it was only last 2 years when we had enough liquidity on the exchange, so we can safely sell it without like dropping the price heavily.
Okay, but so
most of the
But so you did not sell Zano to any private investors, any pre-mined Zano to any private investors. It was all through exchanges.
No, I
did
think
you?
But you mean like a big
maybe you can
investor?
comment it better way because it.
Sorry, I didn't catch that.
You mean like a big investor?
A private investor. So someone says,
Not
"Hey,"
through exchange. Is that the question?
like Roger Ver, for example, or anyone
I
else,
think-
any private investor. Did you sell to any private person
Not through
pre-mined
exchange.
Zano?
Not the dev fund. We had a we when we onboarded Roger Ver, we had a I don't know if we should say it, Pavel. What do you think?
Well, we did made the OTC deals with various people, and the reason
all the
we
different people
mentioned-
participated in the deal with Roger Ver.
Yeah,
Okay.
because like you cannot drop a big
We
chunk.
actually
of Nano
convinced
on a-
one of our supporters, like the big supporter, to sell his coin to Roger Ver to get him onboarded because like you need a bunch of the coins. That was the biggest contribution from actually two our biggest supporters provided their coins to onboard Roger Ver.
Okay. So any coins that were sold to private investors from the pre-mine, these are also coins that have an unfair advantage over all other participants. So while you have 5% of the staking power, all the pre-mine coins also have that same unfair advantage. But my main issue, I'm not going to focus on that. My main concern that I'm getting at here is that I've already said several times is that your pre-mine stake is essentially a dev tax. So I think we beat this topic to death. You don't agree, but you see it, right? So we let viewers make their own assessment on what they think about that.
Now, can you repeat what's the unfair advantage for the people who bought coins OTC? They paid the market price for it. Why is it unfair?
Well, like I said, this isn't really my main concern. It's more the pre-mined coins that you guys stake. But I don't know if the coins that were sold to private investors were sold at spot, under spot. But in the end, okay, sure.
It was even over the market price at the time
they was
because they
buying
wanted.
with premium.
Okay.
Yeah, and as per taxation goes, I still don't think this is an issue because you can say we did like 20% pre-mine and over time it rises up to 23 or 25 because of the blocks we produced. This is still just a number.
Okay, so at the end of the day, just to cap this particular concern is just that the pre-mine at the launch of the network and the staking of it is essentially, to me, I view it as a dev tax. It's an unfair advantage to all other network participants. Yeah. So whether...
Can I ask a question?
Sure.
Like a quick question. If we have a situation where the dev fund stopped to stake, would it be I'm not saying that we're doing this. I'm just wondering your position. If we stop staking the dev fund, would it fix the issue for you?
Well, it would make it better, but it's kind of already happened. But over time, as regular users get distributed coins by mining or staking themselves, your unfair advantage drops over time, over a long time, of course, because it's you have quite a lot of them. But it doesn't erase the past unfair advantage and the past dev tax that you guys have collected from the network.
I got your point. Can I'm since this debate, can I ask other question?
Sure, of course.
Do you have on your mind any form of continuous funding of the project that you wouldn't call a taxation, which is not donation based?
The pre-mine is the funding for the project.
It's not continuous. It's not continuous. It's going to be over at some point. I mean, do you have any continuous form of funding project on your mind that you wouldn't call taxation?
Well, what other kinds of funding? You said you don't think donations are viable, because that's exactly how Monero developers get funded.
And I have a lot of respect for this. I have a lot of. I actually Monero one of the very few projects that survived that long and prospering, and they managed to be community driven and based on donations. And I have a lot of respect for this, and I really like it. But you cannot put Monero as example because the history of Monero is different. Monero became project number one in the privacy, and it became in the top 10 of project of CoinMarketCap. After like a few months, 2 or 3 months, it was released to public, and it wasn't made by Monero. They was just got the technologies that was working, that was made by other team with a heavy investments, by the way. And most of the Monero, when they bring this example, they don't see this missing part of the picture that was made a great work before it happened. They see just, oh, it's happened. It is a most famous project. And when they became a biggest project and they consolidated a lot of people with this momentum, because there was a great technology behind this and people liked this. It was the first protocol that was built from the scratch with the great ideas, and it was running network. Everything was great. A lot of people consolidated around this. And then it was easier to manage the nation part, because you already have a huge community of people. There was quite a vacuum in the privacy area because there was no privacy projects like this existing and launched. Zcash was writing the papers by this time. And then, yeah, you were lucky, and they were lucky to have this. And then they managed to organize all these people. But imagine situation when you have to build something from scratch. Nobody knows you. You're a guy from nowhere. Also, if you speak about me, I was hated by most of the privacy community because of the efforts of Ricardo and his friends. And it's a whole different story. I don't think anyone would manage to build project from the ground this day without foundation or any pre-mine. And I'm glad that Monero exists. It's a great example. It's even inspire me because I see how this project run it, and I see that it changes the people who run the projects, but the project's still there. It's really great. But you cannot put as an example of how you launch or run the project. Just that's my point.
Yeah, only Bitcoin really achieved.
Yeah, exactly. Absolutely.
Like being built from scratch with just voluntaries and donations. Only Bitcoin achieved that.
And that's the problem of most of other projects, because they try to copy Bitcoin model, but it's not going to work for anyone else. In real, the project that you see, the successful project, they all have a foundation. They have some business side. I mean, most of the projects that are like super business, I don't like they're just created to get people out of money. They didn't bring much of technology, but projects like, for example, Ethereum, which I like a lot because they bring a lot of innovation into industry, and they are very underpriced project these days, I believe, because they made so much for industry, and still everybody buy bitcoins. But they have it in the right model. They didn't copy Bitcoin. They created foundation. They raise money, and now they do what they do. That's my point.
So I believe if it's a worthwhile project, if it's bringing value and use to people, people will fund you, because this is what's happening with Monero. Yes, that wouldn't have happened at the start, but this is why you have a pre-mine and you build value. And Zano has gone up in price, and now the pre-mine is worth more. So my only issue with that, I don't have necessarily an issue with the pre-mine, even though it's kind of big pre-mine. I guess that is a bit of an issue. But you did get funding by selling that pre-mine. The issue is staking it, because to me, that is essentially a dev tax. And what more it does is that means that Zano is not neutral. It's because one of the comments, I've heard this before as well, a thread from Mr. Quibs comparing Monero and Zano, saying that Zano is like Monero, private money. And I disagree with that, because it can be used as money, just as anything can. But good money is neutral. It doesn't favor any group of people. So
what do you mean by Zano is not neutral? I didn't get it.
So neutrality being it doesn't favor a group of people. It's decentralized. Do you understand?
Not really. Which project you call neutral?
Bitcoin is neutral. Monero is neutral.
Oh no, it favors proof of work. It favors ASIC manufacturers a lot.
Okay.
Every proof of work project is not natural. Not natural by nature, I believe.
Okay.
Which is totally unfair, I believe, because proof of work people don't have any bond with the project. It's very simple business model. They buy the hardware, they make money, they sell it the same day, and they don't care about project at all. That's I think it's a really bad idea to favor those people for a proof of work project.
Also, I think that without staking the pre-mine, people have run out of funds by now, right?
Sorry, what?
Yeah, we do all these measurements at the recent all-time high, which is like, I don't know, $16-15. But if you run the same calculations at the 20 cents price, you realize that this is not a lot of money to support the project. And when we take staking, you just like extending that amount by 2 or 3% per year, which does not change anything. So I don't really understand what's the issue with the staking. It was our idea for a future that at some point we'll have a fund that would allow us to pay the bills. But until that happened, we would have to sell the pre-mine like you suggest. So this is kind of like a hybrid system, and it's working. I mean, if we manage to maintain the price high enough to pay the project expenses, that would be the ideal scenario.
Okay, well, you don't see the issue with that, but I'm just telling you that
I
do.
think just
and
to like just to kind of explain for people viewing too, what Untraceable was I think trying to say, and Untraceable, correct me if I'm wrong. I mean, basically saying that if you know if Monero or whatever is going to be the money of the money utility of the world, then as it goes up in market cap and gains adoption and grows, it can't be that it's benefiting some small group more than others, right? And so the idea is in Monero, it's pretty good. It's distributed pretty well to the point where there's no centralized group that's benefiting. Look at something like Zcash. Obviously, there's a centralized group that's benefiting. So he's arguing, or Trace was arguing that because of the pre-mine and the fact that it's staked, that there's a small group that's benefiting more than others. And I guess the way I would look at it is, you know, I think even John Murphy would agree. I mean, that's basically what his presentation was on, is that it's a spectrum, right? So there is no perfectly distributed, even Bitcoin itself, right? There were just a few people that were originally mining it that were obtaining way more of it than anybody else. Obviously, Satoshi obtained a ton of it, but those coins seem to be locked. But yeah, there is no coin that is purely fairly distributed, and at the end of the day, potentially not benefiting some small group. But what I would say is perhaps the saving grace for a project like Monero, and arguably for Zano too, is the fact that it has a tail emission. And because of that, over time, and I think Untraceable, you even touched on that a little bit, over time, things will even out. And that's kind of what the argument is in Monero, that over time, it'll be more fairly distributed because there'll always be new coins created. But I just want to get those thoughts out there and clarify things.
Yeah,
I think I've got the point. And I see that the point as a project makes kind of more money than expected with staking, which is called taxation. We have to, that's a good point. I see this point. We have to make it clear that the project's money, it's not mine or Pavel's money, and it's a matter of governance. It's a matter of how projects spend this money on the project. So if this is concerned that me or Pavel take this money, it's other problem that we can discuss too, because we have and we really actively work on how to organize the governments for the project, because now it's became a quite big money, and we don't want to manually control this only by ourselves. And that's another, we can discuss this topic too. But if this subject is about that the project makes more money than expected, I don't see how it's bad. It's for the project benefit. If we agree that this money is spent on the project and managed properly, I don't see it as a bad thing that project have more funds to continue with this.
I would even add, if it will be like way more than expected and way more than reasonably needed, we would burn the amount that is deemed unreasonable. Imagine Zana going to a 1,000 per coin. We wouldn't want to see it on the 5% of staking power at this point. It never happened before, and it was never a concern. And I don't know if it's the right venue to announce that, but we are already working on the decentralized governance for the debt fund because
we can actually touch the subject now if it's a proper time. We can explain how we see the future of how the debt fund will be managed in future, because we really started to speak about this with our supporters, and we started to think that we don't want to control ourselves this whole amount of coins, and we want to move it to a vault that controlled by the stakers, all stakers, with a governance mechanism. And we already have a technical way how to do it. We already discussed with this vault, with the core team. So we actually have idea how to actually give the dev fund back to control of the stakers, and then they can vote or put the veto on any expenses that the team would be requesting. It's the governance is very complicated subject, because it's I even now, after reading like a bunch of models. We don't know the perfect model for the governments because every time there is a way for manipulation or some different ways. But we're looking into this, and we really want to build something that will be fairly managed. And if, for example, Untraceable or whoever else have ideas how the governments should be working, we are really welcome everyone to give it a shot and present what you see is the best governance model.
Okay, and yeah, Doug, you did get that right. Your summary. Essentially, what it comes down to, this is the like the, for example, what DarkFi is doing. It is because at the start of a network, when it's pre-mined with proof of stake, then the distribution of coins hasn't even had a chance to take place, and it does favor a centralized group of people. To me, that is not neutral, even though it can be a spectrum. And to me, for that is not good money. But what Zano is to me is a platform, and if it's all about the way that it's presented, and if it's marketed correctly. And so to me, Zano does have a dev tax. It's not neutral, and it unfairly favors a group of people who have a hold of the pre-mined. And moving on from that, I guess you'll be happy to hear that is my biggest concern. So that's out of the way. The other stuff, I mean, otherwise, guys, I think Zano is it's good what you guys are doing, because we need experimentation, and that's what Zano is doing. And even though at the moment, the next thing I want to get into is the confidential assets, because even though it is a good thing what you guys are doing. Hold on, my desk is lowering. I want to sit again. At the moment, what it is that I don't see the use case, because I've made this point on Twitter before, that confidential assets, as they are implemented currently, are completely centralized to the issuer of the CA, and there's no way to fairly distribute them. So essentially, the creator of the confidential asset is a central bank. And to me, that's not what I'm in crypto for. I want decentralization. I want trustlessness. And maybe that's something that can come down the line for Zano. But at the moment, I just don't see the use case. And even what Aaron Day is doing with Karma, the gold-backed stablecoin, I just fail to see that how that's useful for anyone, because at the end of the day, you are trusting Aaron or his company actually have that gold, and they're not going to get raided by the FBI or whatever three-letter agency and get taken down and all the gold seized, and then your money's gone. And we have to have Aaron give us these tokens that we hope they're IOUs essentially. And what can be, this already can be done actually. We have Tether. Tether also has a gold stablecoin, and you can put those on Railgun, on ETH, which is a privacy protocol similar to Tornado Cash. So you can already have private centralized stablecoins on ETH. It's gold Tether. I forgot what it's called. It's like TAUD, or I don't know what it's called. But this already exists, and it's to me, it's worse user experience on. Okay, I can't say worse. It's, I guess, equal user experience. If you're going to do it on Zano, it's going to be the same thing. It's going to be centralized, and we have to trust Karma or whoever's issuing the token is going to act in our interest. So maybe you can tell us what's coming down the line for Zano and confidential assets. Is there any ideas you guys have on how to tackle these issues, or is that not an issue to you guys either? What do you think?
Well, it's a little bit of both. First of all, it's not the final design. Obviously, we will work on the distribution schemes, but the way it's designed right now, it is designed on purpose. Confidential assets aren't meant to replace Zana or Monero, to have a fair distribution and be used as a media of exchange. It meant to tokenize the assets. And obviously, you will have to have some party responsible for the assets you're tokenizing. And it doesn't have to be always decentralized. I mean, when I don't trust Tether to have my entire net worth in USDT, but I trust Tether enough to have few $100 to send around. So the same approach could be applied for confidential assets. You don't have to trust your entire net worth to whatever issuer, but you can still have a privacy focused stablecoin and you can send it around and people wouldn't know your balance. But yes, you will have to trust a guy with a bar of gold somewhere. And it's not just a stablecoin, it could be any other asset. For example, another project that is being launched on the confidential asset stack, confidential layer, they wrap other on-chain assets on Zano. And there should be a wallet that is in control of the source asset. It could be, however, decentralized, protected by the threshold signature or any other scheme, but there should be a place where that protocol keeps the original one. And there is a market for that. I mean, the RWA segment of tokens, it's a big part of the market. So I can't say that there is no value to it. Maybe this is not something that you would particularly use, but I believe there is a market.
Railgun, by the way, uses a trusted setup, but I think the point is it's good to have options. So if you want to do confidential assets on a crypto nodes based blockchain, then you can choose Zano.
And is there any expectation that Zano will have some sort of smart contract functionality in the future?
Well, we don't want to bring virtual machine on Zana because that feels like rebuilding the entire Ethereum. We would rather work in the direction of bridging and execute smart contract operation on either Zana subchain on another L1 with the EVM capabilities, because we are mostly aiming into collaboration more than competition. So if we could use other strong points of other projects to our advantage, we would rather do that. Although it's not impossible to put a virtual machine on something like Zana, it's not our goal or plan.
So yeah, as it is, confidential assets to me, I personally, it's not something that I'm particularly excited to use in their current state because of the centralization and the need for a trusted party. I have suggested to you, I don't know to who, but I've suggested to someone in the Zano team before on Discord and also elsewhere.
I believe it was me. And as I mentioned,
Yeah.
this is a work in progress. Of course, we are researching other ways to do the distribution. This is just something that we have up and running on the mainnet. I believe it's not useless, but I'm also not saying that this is the absolute perfection and we will stop researching the area.
Right. So there is potential. I see potential, but as it is currently, I don't see many use cases that appeal to me. And I imagine there's a lot of people who feel the same way. And the thing is that this is the thing that Zano is doing, right? It's confidential assets. And it's unfortunate that we do require centralized parties and trust to to be able to do this. I created my own assets, Dogenero. I guess meme coin, shit coin, just it's whatever. I don't know. I gave it a couple billion supply, and it was also very difficult to send it out to people. I made a post on Twitter, and I said, whoever wants some Dogenero, comment your address or your alias here, and I'll send you some. And that was a pain in the ass, because the Zano wallet doesn't even allow me to send to multiple addresses in one transaction. All Monero wallets, all good ones at least, you can do that. You enter an address, you enter how much Monero you're sending, press enter the next address, how much Monero you're sending, press enter, and you can send to. So for Zano, I had to do this one at a time, and there is the lock period where you can't send funds after doing so. So it took me a few days to get through everyone who commented on that Twitter thread for me to send some of this worthless Dogenero to them. So that's when my eyes really got opened. It's like, well, I have to distribute these coins. I can't do it in an easy way because of the lock period. And it's completely centralized. I own all however many billion Dogenero there is. And the only possible way to get this to people is for me to personally go into my wallet and send it to people. So
can I ask why you keep saying that it's the only way possible is to have it centralized?
Well, what other way is there?
I mentioned it a few times, I think, on Twitter, that there is a at least shared secret where you can distribute the secret between a bunch of people, and that's how the breach is going to be working. I mean, soon that we are building with other team. It's not the only way. You can, if we have a we can Ethereum signature. There's a potential option to control the set, and you can have a group of people that control this, not in a centralized way. Like up to 50 people can be in control of this address, and you can build any decentralized protocol around this. And that's going to be same way decentralized as any other entities that run stable coins or something. That's probably we didn't provide a great example of use yet, but I can explain it later, and even provide with a library that can build a distributed signature from a bunch of people up to 50 people. We have it in a test network. It's not in the mainnet yet, actually, but the way we created it, it's meant to be decentralized, of course. Otherwise, it would be all based on trust, and that's we understand that's not how crypto works.
It's still a valid point. Yeah, I have to agree, because we do not have that information out there on the.
Yeah.
So it's a fair assessment, and I agree with the feedback. The user experience is like.
Oh yeah, that's true. That's true.
As I mentioned, this is work in progress, and some of the issues you mentioned were already addressed with the changed in outputs, and the other thing that Andre just mentioned, the Ethereum-like signature, is already live on the testnet, and we'll introduce it to the mainnet in coming weeks or month. I'm not entirely sure.
We can probably even post a threshold signature example of how to use it to build decentralized custody around these assets. And the said about user experience with waiting for UTXO, we created multiple outputs when you emit the coins, so you don't have this problem that much. And the problem with not sending from Zano interface to multiple destinations, I totally agree with this. That's gonna be we should fix it.
Yeah, well, we are a little bit behind on the product side of things, because we are a small team and we are aware of those issues, but it takes a lot of time to catch up. But like, we know and we are working on it.
Okay, that is. I didn't know about that. You could have 50 people have control of the asset. That is cool, but I wouldn't say that's necessarily decentralization. That's That's just a federation, as someone said in the comments. And
but the confidential layer, sorry, confidential layer is even more decentralized, right?
Well, it's the same threshold signature scheme, but they can make contract calls. So in a way, you can have some programmability to the distribution scheme.
But basically, this is something that we came up at this moment, and we are really open for any ideas how to make it even more decentralized, or which tech we can build inside this to make it not federated but shared between more people. That's the goal. That we want to build the tool. We don't want to build a stable coin ourselves, or don't want to build any tokens ourselves. We want to build a platform that people will use, and decentralize that the big issue, and we work on this. That's just a quick solution that we came up, like maybe it's a temporary, maybe we can come up with something better next year.
So the bottom line, the crux of the issue with CAs, confidential assets, it's not whether one person has control over it or 50 people have control over it. At the end of the day, you're still requiring trust in those people in a space where we value don't trust, verify. So to me, I wouldn't call that decentralized. That's a federation. Those are things that Bitcoin is also doing, and most Bitcoiners also don't like this. So at the end of the day, if the issue being requiring trust in a centralized person or group of 50 people or a group of X number of people, that's the issue, because humans are always vulnerable to I'm having a brain fart, to corruption, right? And you have to trust that they're going to have your best interest at heart. And so what we want is code to do the work. To not trust the person or group of people, but to trust the code that it automates it, and it does what it's supposed to do every time. So this is really,
you can build a code on top of it, or why not? If someone came up with a L2 solution for this and build a protocol on top of this, for example, private key, and they put it into protocol how to approve the transaction, it's going to be something that you're speaking about. It's going to be not on the trust, but on the algorithm.
Right, and if it can be done in the future, that's great. But I judge the value or the worth of a project by what is possible today. So maybe, hopefully, that's something that is possible, and we'll see. The other question that I had was regarding the confidential layer. So that's not you guys. That's a completely separate group that is working on confidential layer.
Yeah, it's a project based on Cosmos blockchain. This is how the TSS signature validators communicate with each other. They integrate Zano and other privacy tech along with Ethereum and Bitcoin.
Mm-hmm. Okay. And okay, well, since it's not you guys doing it, I guess I don't really have any
know
questions.
how it works, though, if you're interested.
Okay, sure. Yeah, share that a little bit.
So what exactly is your question?
So we're told that it's a bridge, and we're gonna wrap assets onto Zano. How does that work? Where does the Bitcoin sit once you bridge Bitcoin and wrap and create a confidential asset on Zano? What is the process there?
There's a Cosmos-based blockchain with the node validators. Let's say there's a collective of those nodes. They together receive the incoming transaction to the wallet they control with a distributed key. They check the validity of the transaction and they issue the corresponding asset on Zano chain. So the original Bitcoin stays in the wallet, and the key to the wallet does not exist until the consensus reached on the network, and they create the key to release the Bitcoin or any other.
I can little addition to this. The private key does not exist at all. There is a threshold signature, so it means, I mean, you probably know what it means. That the fractions of the key exist on between all this group of people, like a 50 person. But the private key doesn't exist at it, and it's never exist. And they can create a transaction from the custodial wallet only together, not all together. It's going to be some majority of like
66%.
80%. Yeah, some percentage of them as it's part of configuration security setup we will configure. But that's the whole idea, and that's why they use this to not have, because the biggest problem of the bridges that the money got stolen at some point. So we want to remove this point of weakness. We want to remove the custody from someone or someone. So it's going to be as much people as possible.
So if I understood correctly, so someone initiates the bridging process. They send their Bitcoin to a wallet, which is controlled by someone at the confidential layer.
It's controlled by a group of people. It's not controlled by any person. There is no private key exist from this. There is a group of equal validators, for example, 50.
Yeah,
50
I don't think we should say group of people. It's not a blockchain with users and nodes.
Yeah. It's actually the rules are written in the Cosmos blockchain how it operates.
So no person could then withdraw that Bitcoin, is what you're saying?
Absolutely no. That's the whole point. Absolutely.
So on the other end, wrapped Bitcoin is created on Zano. Now, what happens then with that wrapped Bitcoin? Who controls it?
Same way. Absolutely the same. Set of fraction of private key. They control asset. We call it asset descriptor object in Zano. They have a collective custody of the asset, same way they have a custody of Bitcoin, or same way they have a custody or EVM network. Same way they have a threshold signature on the Bitcoin side. They have a threshold signature on the Zano control asset side, and they have a threshold signature on the EVM network side. So they have a public key that existed, which basically is address, but the private key doesn't exist for them. It doesn't exist, and it's just a fraction of pieces of private keys distributed between token owners. That's the whole point, to build it this way, just to not have a single point of failure.
So how does the wrapped Bitcoin get into my hands? So I want to wrap one Bitcoin, I send it through confidential layer bridge, and then how does that wrapped Bitcoin get to me if no one controls the key?
At this moment, we have the script. Basically, you attach some payload information into Bitcoin transaction, where you put destination network where you want to bridge it, and network ID, like a really small really small number, and you put the address destination at the network where you want it. For example, in Zano, you put the network ID of Zano and the network and the address in Zano. And this is encrypted on the shared secret, so nobody and the third party can read it. So only bridge can read it. So it's some sort of privacy. So you just send this Bitcoin transaction, and that's a bunch of nodes that looking into Bitcoin network and EVM network and Zano network. They see this transaction, and I don't know how exactly it works right now, but as for last conversation with the team, it works like the initiator initiated with anyone from these nodes and ask, hey, can I get this? And they started the whole process. Or the process started by seeing this transaction if the fee is included. It depends how they have it now.
So the wrapped Bitcoin on Zano can only be sent to the receiver's address, the payload that you include in the Bitcoin transaction, and then it wraps, and it can only the recipient's address, the address they indicated, can receive it. Am I understanding?
I think you put the payload information into this transaction and in an encrypted way, so the bridge itself can understand where you want to get this wrapped thing, in which network and to which address, and then it processed. And then they collectively validate this transaction. This transaction is valid to this address that have enough funds, and then they collectively confirm this transaction, build the threshold signature, and emit money on the other network.
So what are the risks? Are there any?
Like any blockchain, there is a lot of risks. The first of all, we are now in the middle of peer review we started peer review of this protocol with the common prefix. We also hired them for doing peer review for the consensus protocol update that we're working on right now. But we will have some sort of formal review quite soon from them. The guys seems to be very experienced in the bridge building. So it's going to be probably more formal academic documentation of the whole process that I just explained it after this review. But we hope that we can address the risks with this team. But basically, the risks that we missed something in the protocol level and someone can exploit it, which is true for every project.
Yeah, which is always the risk.
Yeah.
Okay.
And the risk that we did something really stupid with the code base, or the team that built the bridging part, they did something stupid.
But
or
there
it's
are
going to
no
be like so many things.
I mean, they've been building bridges before, and they have quite an impressive GitHub. So I'm fairly certain it's not going to be an amateur work, but we're still gonna have
it's open source, is it not?
Yeah. Okay, of course.
Okay.
Yeah, sure.
Okay. So there's only one more thing that I wanted to touch on, and that is the transaction fee on Zano. Why is it? I understand why it is 0.1 is the transaction fee. It's a flat fee, hard coded into the protocol.
Yeah.
So the hope is, and this fee gets burned.
Yeah.
And my criticism of that is, this is called like tokenomics, but to me, I would call it pumponomics. Are you familiar with that term?
I feel what you're trying to say. I would probably agree with what you're saying. We should get fee lower. Yeah, this is very urgent to do that. We have as soon as we have more free time and won't be that
you should probably mention
they will
that
work on this.
This is something that was supposed to be done already. It was planned
by.
So
first of all, we didn't expect that action of the price action. No one expected this, so we caught off guard of this. So we have to do this as soon as possible.
So these are pumponomics. The hope is that if there's with enough activity and these fees getting burnt, which is at 0.1, that the fees burned outpace the emission of new coins, right? So then Zano would be deflationary, and hopefully that would cause the price to less sell pressure and higher prices. But my issue with that is two things. One is a few things. The use cases, like I said, for me is not there, because it's the creation of maybe with confidential layers. I haven't completely, to be honest, I haven't completely looked into that. It's not you guys' project. It's a separate. And you saying that that it's locked and no one has the private key to it. So maybe there is some merit there. I'm not saying there is, but I need to look into it further. But on confidential assets themselves, the distribution having to rely on a trusted party, to me, that is not a good use case. So how will you get that amount of activity for those pomponomics to work, to reduce the supply of Zano, to burn more Zano, when you're requiring centralized third parties. I mean, maybe other people see the use in it, but to me, I'm saying from my point of view. And then also the need for human intervention. If the price of Zano goes to $1,000 and you're still paying 0.1, that's $10 every transaction. So you need a human to go in there and modify the hard-coded fee. And it's more points of centralization, in other words. So to me, that's not ideal at all.
I agree with this, and the hard-coded fee was it was a temporary and stayed temporary for a long time. Yeah, the goal is we want to build something similar to Ethereum, that the fee would be as low as possible until there is a high demand of transaction, to protect the network from transaction flow. And I personally, I'm gonna have a lot of hate probably from Zano community because of this, but because I say this, but I don't care about deflationary pomponomics stuff. And the only way that Zana can become a deflationary if we have a really big transaction flow, and that's the only way we can burn more than emit in the blocks, which is gonna be a huge number. But it doesn't concern me at all as a developer. I'm concerned that the network is a healthy network, is transacting, and the transaction goes a reasonable price and secured with a good consensus. I mean, I wasn't even have any opinion about this burning more than emitting. It's more, I don't know, just not really concerning me.
Right, and in my opinion, the pomponomics aren't even designed in a very smart way, because you need quite a lot of transactions to reach the point where Zano is deflationary. Because Monero is much larger market cap and usage and adoption, and Monero gets 30,000 transactions per day at the highest on average. And for Zano to negate all new emission, you would need 144,000 transactions per day.
Yeah, that's true. That seems to be about right calculations. I agree with this, but I cannot. There's a people who like this idea and they teach it this. You cannot blame us on this. That's just an idea that people like.
I mean, sure, yeah.
I think any amount of Zano burn is good, but yeah, it's just a nice to have. It's not that we need Zano to be deflationary right now. It's not really necessary.
But we can make it deflationary in another way. You know, if we really run for it. If you want to make it deflationary and build the pomponomics, as you say, I would do it in a different way. That we are working on the new consensus upgrade right now that I'm really excited about. And if no one gonna break it, and we can get the peer review results that confirm that it's secure, we can actually drop block reward. Especially we can drop block proof of work block rewards, because proof of work doesn't really matter in our consensus. It just protects us from certain long range attacks, but it's not the cornerstone of the consensus. And if my proposal gonna work out, we can drop the block reward to even lower. I'm not sure if it's needed, but we can do it.
And I would say that this is another issue, another thing that makes Zano not neutral and a bit centralized, is because you're requiring human action. If you're going to change the fee for one, you are changing the economics of Zano. If you're going to change the block reward, that also is changing the economics of Zano. If you look at Bitcoin and Monero, they've had their economic policy set from the start at Genesis, and they have never changed. But this is something that you guys are eventually going to have to do. Is to change the economics.
Did Monero have what is the time target on Monero blockchain? Is it once in a minute, or?
It started at 1 minute, and then it was changed to 2 minutes, but the block reward stayed. The block reward stayed
doesn't matter. You
exactly
changed
the
the
same.
tokenomics already. The emission curve was changed.
No, it did not.
It didn't. It didn't change. First of all, they added tail emission. It changed.
No, it did not add tail emission. That was in since Genesis.
Oh no, it's not true.
No, it wasn't.
Man, it wasn't, man. You're telling me what wasn't printed in Genesis? I made this blockchain. It wasn't. So Monero, first time Monero changed the target time. So this changed the economics. The second, I'm not blaming, actually. I think it's a very smart decision to do. It's just you're making the wrong assumptions and wrong point. I'm just proving it.
Okay,
So
but the
Monero
target on the target time is the target time for new blocks changed, but the amount emitted did not.
Yeah, but you change the amount of coins emitted per day. If you change the target, you drop the amount of coins, drop it twice.
So I don't know
how many blocks you have per day
so
in Monero.
For example,
1,400.
For example,
if you drop it twice, you have a 700.
For an example, the block reward of Monero now is 0.6 per Monero. And if they were to change the target time once again to 1 minute, then they would make the reward 0.3, right?
You speak about tail emission right now.
I'm talking about the block reward. So the amount of coins emitted per day stayed the same. The target time of blocks changed.
Okay. So anyway, it's one time. They changed it when they made the tail emission.
Right. When was tail emission added? As far as I was aware, it was since Genesis. But if you're saying it's not, when did that happen?
No, it's not.
When did that happen?
It was. I have no idea. It wasn't at Genesis.
It was in the first months, I think. So.
Tail emission and
tail emission.
But does it matter? Because I feel like we are in agreement that we need to implement the dynamic fees, and it's on a roadmap. So I don't really see the reason to argue here.
Dynamic fees are coming, but I think he's worried about us wanting to change the emission. But I mean, that's also up to the community. That's also why.
Yeah, we don't change those things on the go, of course. But this is a general consensus among the community that we need to have the dynamic fees. And we could put it on a vote if necessary. But
not for dynamic fees. I mean for changing the block reward, reducing.
Yeah, this is something out there that Andre just brought as the idea to create the pumponomics, as it was mentioned. But that's not the immediate plan on the roadmap or anything else.
Well, to me, changing the emission, the economics at all is not a good thing. It means that it's what Ethereum did, and it means that it could happen again. Their supply is not predictable. Another thing that we need in good money is that the supply is predictable, not that 1 year you're going to have 1,000 coins come out a year, and then next year is going to be 500, and then maybe the year after that they're going to say, oh no, that was a bad idea, we're going to change it again. It means that it's unpredictable. It's requiring human intervention. It's changing the economics. So if you have a certain percentage of the coins, as an investor, as a holder, you have a certain percentage, and you know that it's going to stay like that forever. You can extrapolate what your percentage holdings of the coins that exist or will exist will be at any point in the future. But if you're changing the economics, then that's no longer something you can predict, and it's not neutral. It's an aspect of centralization.
That's a
but how
point.
you act?
Hold on, you are just creating more arguments. This has never happened, and we wouldn't change the emission just because we want to. What Andre is saying, he is arguing from the technical standpoint that it could be done. But this is not something that ever happened in history of Zano. We didn't change the emission.
Yeah, it's true.
But it will have to be done with the fees. If, as you hope, that the price of Zano will increase and the transaction fees are going to be expensive, that's changing the economics.
Yeah, this is the plan. It's on a roadmap. Changing the block reward is not.
Yeah, first of all, fees are soft rules. It's not hard rules. You can basically use whatever fee are you using. We just same way as Monero use it. It's a soft rule regarding the fees. It's been like this forever, and it's just a default strategy for the fees. But basically, whoever wants can change it. You can start accept a transaction with a lower fee or with a higher fee if you want. Yeah, just double check it. Monero introduced tail emission in 2022. So they, I mean, it's a smart
that's when
decision.
tail
that's when
emission
it started.
started.
Yeah.
And I see that there is that they announced it in June 2022. But I think it's a smart decision. And
That's not when it was added. That's when it started.
Yeah.
That's when the tail emission started.
Yeah. Okay. If you
as
have
far
a
as I'm
data
aware,
added,
this was in the code since Genesis. You're saying it wasn't. I have to double check that.
it wasn't.
I've always.
Yeah, we can check it, but it doesn't matter. What if situation changed and the project needs to react on some new
Then the
situation,
project fails.
or it fixes the problem and goes on.
And then you're not neutral, fair money. You're not decentralized. You are changing the economics. People can't rely on the asset having a predictable supply, or you let it fail.
What if you change it to benefit of everyone? If, for example, I'm just asking, what if how you think if it changed it to benefit everyone who hold the coin by dropping the block reward to smaller amount?
It would be unpredictable. It would not be a good thing. We could make it so that Monero has 0 emissions. Actually, that wouldn't work because of we need emissions for the dynamic block size. But let's say that not considering dynamic fees, we could just say no more 0.1 block reward, as low as it can be, as low as inflation it can be, and that's going to benefit the community. But in reality, it won't, because people will see that they can no longer rely on it being neutral, predictable supply, a neutral network, as the humans behind the scenes changing the economics for what they perceive will be pumping the price. So it would not be a good thing. And I personally would no longer believe in Monero if that were to happen.
Yeah, but that's not happening in Zano. I mean, yeah, the community can, pitch for whatever they want, but just as they can do in Monero, like Monero hard forks have to be approved by the community. But it's the same in Zano.
Yeah, this is more about decision-making process, and we do have our own. I'm sure Monero has their own, and we are not doing something we don't believe that would benefit the project. But if we know that something has to be done, we do it. Same way as Monero does.
So with that, guys, I think that's about it for me. We've discussed a lot of information, and that's all the points that I wanted to touch on. So yeah, thanks you guys. Thank you for coming on here and doing this.
Well, hope that helps. And if you don't mind, I could even go back on the governance topic a little bit, because you mentioned that was your main concern, how we handle the dev fund, because we are thinking of the way of the decentralizing it. So if you have like feedbacks or ideas for design, we are very interested to hear it.
Yeah, this from my point of view, this is not something that can be changed, because you can't retroactively return the dev tax that the fees that you've generated from staking.
Like we cannot change the amount of pre-mined coins, but that doesn't matter, because this is basically a number. You can just add it to the pre-mine and now think that we got not 20% but 25% pre-mine, and just make our peace with that, because those coins are out there. They've been sold to the users, the honest users, and we could just decide what to do with the remaining part.
Right, you're talking about the pre-mine, but
Yep.
like I said several times, the pre-mine is not the issue. The pre-mine is a great way to fund projects.
Yes.
It's the staking, the pre-mine, which is an unfair advantage over everyone else.
That's the part I fail to understand. The
Yeah,
staking is the additional amount of coins that wallet generated over time. So let's just say we get few 100,000 of coins on that wallet that was coming from staking, and the entire wallet would be a little bit bigger. That would still be a pre-mine. It would be generated over time. It's just different number.
Well, whether you get it or not, it is
for taxation. We should use it for any pre-mine, because basically any pre-mine is a tax. Because what you did is basically you took part of the block rewards from all the future history of the coin to pre-mine. That's how pre-mine is calculated, basically.
Right. A pre-mine in itself is also a bad thing, but like I said, I've made my peace with that. I don't know how many times I can say it. The issue is that staking coins that were created out of thin air for zero cost to you and generating revenue out of it is the same outcome of a dev tax, except you are mining the blocks, and so other people can't mine those blocks because you are mining them with coins that were created out of thin air. So it's not the pre-mine, it's the staking of the pre-mine.
I think we can move on.
Yeah.
But
like I said, that was all.
Be able to read off.
Read off some of the questions
out of these. I mean, some of this you probably already talked over, so if you can decide if you want to answer or not. But I'm just going to go ahead and start with the first one that was way earlier, and I'm not going to be able to bring these up on screen because the comment section is so long. I'm just going to read these off manually. We got a super chat from Zorgap. According to Amir Taki, the ring technology Zano relies on is broken, and Monero has moved on from. The CF layer assets it uses an oracle that is a third-party custodial risk, is it not?
I don't know about.
I have no idea what he's speaking about. That's very general accusation. It's broken. I've been saying that everything I do is broken since last 10 years. As far as I know, we use extended version of CLSAC, the same signature that Monero still use, that was created by Sarang. And while extended this version of this signature, and actually Dr. Sarang was the one who was reviewing our extension, the paper, and confirmed that it's working. He even helped us a little bit with adding formal proofs. So if we have Amir saying somewhere that we have a broken technology underlying. If he was willing to, if he found something, he could come to us and say, "Hey guys, you have some broken stuff," and we would fix it, and we would donate him like a fair amount for finding the bounty. But he's just saying somewhere that we have a broken technology. I don't see how respected researchers do it.
Well, we got another comment saying that he says that Monero Ring City is broken as well. So I think
okay,
it's another topic.
But why would he? I mean, if he found something, why don't he come to the project and see? Because we had it a few times, and the guys was pointing out.
I guess the question then too is: Are you guys? Obviously Monero's looking to upgrade to full chain membership proofs. Is that on Zano's roadmap?
Of course.
Yeah, for sure.
And he also asked about confidential layer where he has oracles.
Yeah, wait a second. I had watched an interview previously. Maybe it was Zoidberg who had answered this question about full chain membership proofs, if it's coming to Zano. And I guess correct me if I'm wrong, but you said no because confidential assets were built for ring signatures.
I never said it.
Okay, no, I don't know exactly what you. I don't know exactly what you said, but the answer was no, that full chain membership proofs would not come to Zano.
No, I never said anything like this because we started to speak with Luke and we were actually excited to see him creating this technology. And Val is already working on research on this part, and I couldn't say no. I said it's going to be more challenging for Zana than Monero because we have as I said before, we have extended version of CLSAC. We have another layer of the signature. But I never said it's not possible because this is what Val is working on right now, and we're really looking into this, and we really appreciate that Luke Parker came up with this great technology, and we're excited that Monero having this really soon. That's a great job, and we are building this definitely.
Yeah, it'll just take some extra work because of confidential assets, but it is coming.
Okay, that's good to hear. What I had watched before, maybe I misinterpreted it. You did say that it would be challenging. My understanding
Yes, that's true. That's true. It's gonna be more challenging because I had this type of things are beyond my mind. It's only Val can confidently speak about what's happening on this part because this full chain membership proof is very complicated technology. It's like a cutting edge of everything that happened right now in crypto, and I'm really excited that we are in the privacy. I don't not much people are aware of how complicated and cutting edge technology our privacy coins are. Because if you're looking into EVM network or Solana or Bitcoin, it's great, it's efficient, but it doesn't have that much fascinating cryptography in it, and such a smart and bright decision that building our privacy chains. And I'm really excited about full chain membership proof.
There was a second part of the question, but I think it was addressed when we were talking about the bridge setup and the threshold signature scheme.
It was whether confidential layer was custodial, which is not, and also if confidential layer uses oracles.
Well, in a way, each node validator is an oracle because they collectively watch for transaction and they need to come to agreement between themselves. So there is no single oracle, but they collectively are the oracle, or each particular one is an oracle in that setup.
I think there is a family of the protocol that's called PBFT. It's a form of proof of stake consensus, and the Cosmos network work on top of this, and that's how the bridge will be working based on PBFT consensus. So it's not. I don't see it as Oracle just a PBFT consensus. They agree with each other.
Oracle to something that would be a node validator, I think.
Yeah, but it's basically validator. That's the concept. That's how Ethereum works, basically.
It's Tendermint, the Cosmos. They have.
I'm not messing all technology into it, but the family of consensus protocol is the same. They can get the finality. They can have a really quick blocks. They have some advantage, but the whole family. That's why in Zana we don't have a PBFT, because I myself don't see it as a truly decentralized way. We use different model where everyone can create the block in PBFT. They have a dedicated group of validators that can create the block. It's a little bit less decentralized, but it gives you other advantages that give you quicker settlement, that give you finality, and that's also important in terms of economics.
Okay, let me read the next one. And if you guys could, let's just keep this. There's so many. Let's just keep it rapid fire. 30 seconds to a minute each super chat. Most of these are statements. So the next one is from Nihilist. Pulling off legit privacy coin require a ton of effort. Look at how much work has been put into Monero. You can't just decide you're going to make a new privacy coin by snapping your fingers and expect it to hold up like other scam coins. Trial by fire.
Yep.
Well, agreed.
Save_bunker has a super chat. Besides the proof of stake helping resist 51% attacks, which I don't understand, please do convince us. What other reason is there to put a stake against the cost of a coin?
Oh, this is you.
What is the question? Sorry. Why why proof of stake resist against 51% attack? It's not
The question
resist.
was, what other reason is there to put a stake against a cost of a coin? I don't know if that quite makes sense.
I think they're just asking why proof of stake. Like, why proof of stake? I think they're just saying.
Yeah, that's how I understand
because it doesn't. It technically doesn't protect from 51% attack. It just make it very expensive. Nothing protect you from 51% attack. As a person who was struggled to build consensus for
30 seconds.
Go to the point. There is nothing protect you from double spend attack. It's just a matter of cost of this attack.
And proof of stake is more expensive to attack.
Yeah.
That's the point.
Yeah,
add some protection in that regard.
And the fact that you have skin on the game, so you're not gonna attack your own investment.
Yeah, some people would disagree with this, but I think it's a legit argument. Vitalik says that there is a nothing at stake problem, which states the opposite.
More than 30 seconds. We need to speed it up.
Yeah, okay. I can speak forever about this.
Yeah, I know it's your
You're
favorite.
on my side.
Yeah.
All right, next one, Joe Binen. Maybe I think he meant Doug. Doug, maybe a disclaimer that you got sponsored by Zano and funded by the. Yeah, we already talked about that. Zorgo had another super chat. This it's the same one from earlier. Tux's Tuxedo. People should always be skeptical of newer crypto projects. Newer projects haven't withstood the test of time / the Lindy effect. Monero is great because it's longevity and resilience. Yep.
Agree with this?
Agreed.
Yep, I don't think anyone disagrees with that. Paul Daniels, Monero Talk is the best podcast, and crypto 2025 will be the year of Monero. Thank you, Paul Daniels, for the positive
Agree with
chat.
this too.
Agreed. I like those questions.
From Random, what evidence exists that Crypto Zoidberg was part of the CryptoNote project? That's kind of a long-winded question.
My name is the codebase.
Yeah.
There you go.
It's in there.
There you go. Jamie.
Guys, we're at almost 1,500 live viewers for the day, by the way. This, I think, is our biggest one yet. Whether or not these numbers are correct, it's the biggest numbers I think we've seen. So that's pretty
cumulative, cool. Which is still pretty good.
Jamie.
Sorry, go ahead.
No, it's much like
yes. Smash the like. Thank you, Gunbutt Fire. Jamie said any pre-mined coin needs to be not touched, especially when it's being pumped on a low volume exchange. It will get 90% price retracement. Roger Ver is shilling to dump his bags he bought from the pre-mined stack. Nothing else.
That's not a question. This is someone's opinion, and
right.
I don't have nothing against it.
Fluffy Cat said, "How is proof of stake piece of shit being even entertained here? It's Ponzi 101." Okay, not a question.
Yeah, we're reading these out, guys, because these are the super chats. These are the Monero super chats. So you feel free to respond. I mean, we had the whole. If anybody wants to go deeper down the rabbit hole of proof of stake versus proof of work, we had an amazing roundtable on it at MoneroTopia 2023. The last one, previous one, and Andre was on that round table. People from some Monero devs were on it. So I recommend you go back, watch that video. You can watch the debate between proof of work and proof of stake. Go ahead.
Tux's Tuxedo said, I think it's more nuanced than a tax. If they didn't stake those coins and get a yield on them like any other user could, they would be forced to sell the base of their fund very early into the project. They still can sell that base gradually over time.
Yeah, we will have run out, I think.
Yeah. Tux's Tuxedo also said, I think if they gradually sold off their Zano and their base fund over time via a vesting schedule, it would alleviate some of these concerns. Volume analysis can be done to determine a range of possible Bullberry coins owned by the devs.
Well, I don't know what to say. Maybe, but this is the design we came up and we thought it's a good idea. And if someone else can do better, well, okay.
I think vesting has its issues as well. Like I see it on Ethereum projects that it leads to just chaos. So maybe it could have worked better, but it has its trade-offs as well.
Yeah, I'm not saying we made the perfect decision. Maybe there are ways to do it better. This is just something that we came up with and it was working, and we've been honest about it the entire time. So I don't really have anything to add on the pre-mine topic.
Yeah, and I mean, that was heavily debated already. Next up, we have a real question from Shortwave Surfer 2009. How many Zano does it take to begin staking at minimum?
Any amount?
Any amount.
No minimum.
No minimum.
And no lock times.
And no lock
Not
times.
yet.
That's cool.
Not yet. But if with a new consensus, if we figure out that this needed for the matter of security of the protocol, we may introduce some of it, which create a lot of drama in our holders probably. So
yeah, but how long of a lock time are we talking?
It's not long. It's gonna be 60 to 200 blocks of confirmations probably, but it will create a lot of problems because in that case you would, if you want to optimally stake, you have to now split your wallet into multiple small outputs, which is not convenient, but it will be more effective on staking. It's going to be a lot of confusion about this. We will have a lot of drama about this. So I really don't want to do this. And when I was building the first original consensus of Zana, I really didn't want to go for the lock period. So we have it like same as confirmation, default confirmation wallet. But if we confirm that the new consensus would be benefit from some lock time, we probably would need to introduce it. But right now, no. The short answer is not yet.
Yeah, but just so people know, as far as I know, that output optimization thing only really plays a role if you have like over 10,000 Zano or something like that. So like a huge amount. It doesn't really affect
if you have over 10,000, yeah, it's also true. But yeah, it's true. But if you have a 10,000 of Zana or above, you would make approximately 1 block per day, likely. And then with this, you may feel the difference. Yeah, that's going to be problem of the big holders.
Yeah, it's a big holder problem. At that point, they can just actually do it and take the time to do it. So, yeah.
All right. Adam said NGU does bring in a lot of shilling bag holders. Sure. Tux's Tuxedo said, comparing Zano to Railgun and saying there is no use doesn't seem to make sense to me. That's like saying there's no point to Monero because there's Mimblewimble or Cache Fusion. Fungibility via default privacy at the base layer is valuable. I agree. Joke Tux said, there's a lot of Tux anons here. Seriously, how many Zanos do you hold? You are taking for a pre-mined crap coin whose devs have a shady background. You are going to lose trust. I'm assuming that question was for Doug and possibly me.
All right.
I have not taken any Zano from any Zano people. Doug already has been transparent about what he's received from Zano. Nyla said, question for the Zano guys. What are the long-term goals that you guys have for the project? What are the more interesting use cases that you guys foresee for Zano specifically over the rest of other coins?
Well, it's been changing over time, and right now our idea is to build a platform for privacy in tokens. And as we discussed, it's not quite done yet. There are ways to improve it. So this is going to be our main focus.
Yeah. I think
long term we cannot say because it's the market and the situation, the whole things are changing so quickly. Crypto is transforming, so we don't know. But Pavel is the guy who is responsible for visionary of the things. He's the guy who sees the future better than I do, apparently.
And oh, sorry, go ahead.
Yeah, it's just a platform, so it's up to people to build cool stuff. I mean, the important thing is that we provide the tools.
Scamo said, never seen such shitcoin being entertained here. Question is, what do they want to achieve with Zano that XMR can't? Tokens?
Well,
question mark.
One of those things, yes.
I mean, Zano and Monero are not actually competing. Like, if you just want to use digital cash, then you can stick to Monero, no problem.
Yep.
If you're interested in other stuff, then you can look into Zano. I mean, it's not really.
Yeah, I don't think any of us ever said we are going to replace the Monero. We are doing the complementary things. So I don't know.
I also don't think there is something that Monero couldn't achieve. I really like the team that behind Monero right now, technical team, and I even tried to convince them to do the good things to switch to proof of stake or improve consensus, which would be the great stuff for Monero, I believe. So yeah, Monero can do everything. That's great project.
Andre, I think you predicted that one day Monero will be proof of stake. You made that prediction.
I'm pretty sure that Monero will switch to proof of stake, and I already saw that some developers already have this conversation, like a little bit, like they gently start to speak about this, but I'm pretty sure it will be switched, and that's gonna be for good. I'm really pretty sure about this.
Yeah, I think actually proof of stake would potentially be interesting. I know there's a lot of people who would be opposed to that, but it would actually work great with Monero because the entire supply was distributed for 11 years now through proof of work with no pre-mine. So it would maintain its neutrality and its fairness in that sense. So or maybe that conversation can continue to take place in the Monero community, but it sounds interesting, honestly.
And I've got a two-part questions from an Anon. First part, is the Zano Foundation formally organized anywhere, and does it have investors? And then the second part is, do you receive any payment / token allocation from confidential layer?
It's not, and we did not.
So no.
A very, very short answer.
Well, I've been told to keep it short, but no, we do not have like a foundation. We have like chats and groups of people who we talk to. This is mainly our Discord server, but there is no formal organization or anything that could influence the decision-making process.
Some people try to influence us with. So they try hard sometimes, but not recently.
Yeah, and as far as confidential layer allocation goes, we do not have a allocation part assigned to us.
I wish.
Well, that was, I think we just got
full
through
transparency. I registered for airdrop, and I might get some. But
oh yeah, I got the airdrop.
All right, Tux, was that all of them? All the super chats?
That was all of them. Yep.
All right, and there's a lot of other chats, guys. But if you want us to bring up chats, you got to super chat them, especially on a day like today when we're getting 1 million chats. So, thank you to those who sent super chats. I think most of them were from John Murphy, but thank you, John Murphy, for I could tell
I'm so fascinated how this guy.
A lot of them were like only 25 cents. What's that?
I said I just fascinated how this guy John Murphy obsessed with Zana project. This is he spent most of his time on writing about Zana. This is so cool. The guy is like really
listen. Like Untraceable said at the outset, it's good that we're prosecuting these projects, or that we're bringing them up. We're putting them through the mill. That's fine. But yeah, he seems a little too obsessed. And what I don't like is he's doing things like he's attacking me like personally, and so it seems like he's got a vendetta. So I don't know what that's about. It seems more. It's not that he's looking out for everybody. It seems more that he has his own vendetta.
This is so strange because I saw him on MoneroTopia, and he was like so friendly to me. He was approaching, like smiling to me, and like was super friendly. I was like, why?
Listen, I think it's as simple as he sees the price going up and he doesn't have bags of Zano. That's really, people's emotions are pretty simple at the end of the day. Whether we hold back, and like I said, I have Zano from you guys sponsoring it, right? So full disclosure there. But listen, I think this is a great talk. If you guys can stick around, we could do the viewers on stage. We won't let everybody talk, but we could if some people have some questions they want to engage with you a little bit, and you guys are down for that. Also, just engaging with Untraceable as well, and we can kind of finish it off there, letting people converse. I mean, basically, Untraceable. At the end of the day, he doesn't like the pre-mine and the fact that you guys stake the pre-mine. That seems to be his biggest issue. And then, where I fall on that is it's the information's been out there, right? So the question was, is Zano a scam? I know Untraceable doesn't even like the framing of that, right? But just to simplify things, right? That's the question. Is Zano a scam? By any measure, I don't see why you would categorize Zano like a scam. You may not like the project for certain reasons, like Untraceable is describing. He might have personal reasons why he wouldn't want to invest in a project that has a pre-mine or that's staking a pre-mine. But it's fully disclosed. Nobody's being fooled. Nobody's being tricked, as far as I could see. Right, all the information's out there. There's pros and cons to the project, and then it's up for you to decide whether it has merit and that it will gain utility as it grows. So I don't know. I mean, maybe now we do viewers on stage. We let other people kind of like chime in on that and discuss whether or not they think these things have merit or not. And yeah, on Untraceable, I don't know if there's anything else you want to round out, right? I mean, I think that's really your biggest issue is the fact that there was a pre-mine and it's being staked. I think people could argue whether or not that's a big issue or not, and whether or not that's like a non-starter. But like I think things are everything's a spectrum. And then it's kind of up to people to decide where, how much the value they're allocating to certain things. I mean, like we said, we could compare it to even Bitcoin itself. How fairly distributed was it? Monero had a very steep emission curve. People can argue that it wasn't fair. There's a small group of people that may be holding a lot of Monero from the early days. But yeah, I think that's really what the issue was today, and I didn't hear anything that would define the project itself as a scam. Tristan, do you want to like, maybe you don't want to confront that point, but like, what is your analysis in terms of whether or not Zano itself is a scam, given everything you've learned today?
So the pre-mine is not the issue. The staking of it is, for me personally. Mm-hmm. I know they've been open about it, and it's transparent. The information has been out there, but that doesn't change the fact that it's essentially a dev tax. Just to recap, I guess, there is the question mark, the thing that we can't prove or disprove on how many, if any, Bullberry coins the dev team swapped, which would essentially increase their stake secretly. This is like stealth pre-mine, essentially, but I'm not saying they did. I'm saying it's a possibility that we can't prove or disprove. So these are all trade-offs. There's the confidential assets, which at the moment I don't see a very good use case due to the centralization of ownership and distribution, and the need for trust. The fee, which is tokenomics that don't work very well. You need an relatively large amount of transactions to even achieve the goal of making Zano deflationary. Okay, it doesn't have to be deflationary. Maybe it's just good that the burning of fees is there, but the flat fee and the need to potentially change it in the future. All these things make Zano not good money, not neutral, and the need for human intervention. And at the end of the day, these are all trade-offs. So if Zano is accurately marketed in that way, that it's they did say now that it's not in competition with Monero, it's not aiming to be private digital cash. It's more like a platform, which I agree with. And so, yeah, people make their own decisions. The facts are out there. The question mark is out there, and I can't say that it's a scam because I that's just not something that I do. You know, people just throw that word around, and it's lost.
Yeah,
all
and I
meaning.
get that. I get that. It's misused. Definitely misused. Yeah.
If you weigh all the information that there is, and you make your own decision, right? So, and in this world where you have Fartcoin and Doge with Hat, and people willingly invest in those things, right? So, as long as you have the information, you can make your own decision. If you think it's a scam, sure, whatever. That's not my take on it. I'm wary and I have these concerns, but overall, it's good that Zano team is experimenting and trying new things, even though I don't agree with a lot of the decisions that were made in the project.
All right.